Bitcoin has been absolutely soaring over the past couple of weeks. A lot of optimism has returned to the space, and I think that we could very well retest our all-time high figures of about $109,000. What's going on, guys? It's CryptoDave here with the top tier, and if you enjoy these market updates, if you like following the cryptocurrency market, the United States stock market, then definitely subscribe to the channel, check out our other videos, turn on notifications so you don't miss a single post. I really think you'll find a home here with the top tier so that you can better your trading game and keep up with markets in a very rational and level-headed manner. Okay, guys, without any further ado, let's go ahead and jump into the video. So we've got a lot to talk about today. We're going to be focused on the Bitcoin daily time frame. We're going to be looking at the two corrective periods that we have had most recently in history. I'll first note by saying that the percentage drawdowns that we have seen from the top to the bottom throughout these corrective periods are relatively similar. We can see that from the all-time high figure that we currently have all the way to the range low, or the swing low if you will, is about a 32% drawdown. If we go back into 2024, our all-time high figure of around 74K, all the way down to this wick here is about 33 to 34%. So almost to the percent, these are very, very similar corrections, but the difference comes in the length of time that it actually took to shake this amount of value out of the market, or to see this level of percentage decline for the market. We know that a 30% correction is pretty typical for an asset like Bitcoin, even during a bull market, but it's actually the length of time that interests me the most. You guys will notice here that from the inauguration highs all the way down to our most recent lows, this was about a 77-day correction, so about 2.5 months of time where essentially we were trending sharply to the downside. Whereas if we go back to 2024, this was essentially double the length of time from the actual top to the bottom of this move. It was far more choppy. You had several different retests of this overall resistance range near the all-time high figures, plenty of different capitulation events, right? It was far more drawn out. We can tell that here just by the degree, the severity of the drop, right? If we're just considering, time versus performance, the most recent correction that we've had has been far more significant than what we saw in 2024. Now, the reason I feel like this is important is because of the psychological factor that this plays. It's far easier to stomach a correction of 33% when it takes 144 days. It's quite a bit different when you suffer that same type of correction in half the amount of time, right? It leaves a lot of people frustrated, angry, losing a lot of money, of course. That whole process of beating down the market psychology of a lot of retail traders happened in half the time. And so that makes it far more likely that retail traders or inexperienced traders get left on the sidelines here. And I think that we're seeing this reflected here in the price action. Not only are we coming off of a series of 3 lower lows that left people sidelined at this key level of potential support on the daily time frame, we also saw a clear break of a downward sloping trend. We broke back beyond the 21 and the 50 daily EMAs, right? We made a lot of great strides from a technical standpoint on the daily time frame. And now this is sort of where that FOMO cycle begins, right? Because you've left a lot of people on the sideline who were waiting for the 73, 74K retest. Maybe they entered the trade early a couple of times. We've talked about this on a few different videos here on the channel, where they enter the trade a little bit early, they get flushed out, and by the time the market is ready to stick in the eventual bottom and stick in that bullish reversal, right? All the people who were ready for the discounts a couple of months prior are no longer excited. They're no longer trusting these discounts. They're no longer on the long side of the trade, right? So you flipped people's thesis right before the point of reversal, and now people are not confident in the rebounds because they've been conditioned for each one of these rebounds to get sold off, right? And that's what these corrective periods do to the market psychology, especially when they happen in a pretty quick period of time. You'll notice these blue lines that I have highlighted here, right? This is where we've just gotten straight sideways price action after a major impulsive move up. You get a major impulsive move to the upside, you get about a week of consolidation, another expansive move to the upside, about a week of consolidation. Even now, as we were recording, we were seeing a nice break here in the past couple days, potentially coming up to this sort of $99.5 thousand level. We identified this bullish reversal just a couple of weeks ago. We got positioned to the long side, and our members have been in excessive profits here over the last couple of weeks, guys. So if you want to figure out a little bit more about how we're doing this, then definitely give that a look. Anyways, let's go ahead and jump right back into the video. So I want to look a little bit closer to the daily time frame and discuss a scenario that I currently think is rather likely, just based on the nature of this breakout, right? We've left a lot of people on the sidelines. We are breaking out very sharply. We're not really getting any sort of real pullbacks. We're more so getting these kind of sideways consolidations, right? So we're leaving fair value gaps like the one that you see here. And a fair value gap, of course, is a series of 3 candlesticks where the high of the first candlestick and the low of the third candlestick do not actually overlap in any sort of way, and they create this fair value gap. The same thing can be said about the downside, right? So now we are not only leaving people on the sideline, but we are gapping up in structure, right? We are leaving literal gaps in terms of fair value. We are not producing any sort of pullbacks, any sort of retest, right? So this is where you start to condition people to look on the lower time frames, to look for shorter term corrections, right? They're looking very narrow-minded. People ignore the fact that there hasn't been a real correction in some time, and I think that this is likely the path forward, right? I think we could come up here to this 99K, maybe 100K, very easy psychological level, but even then I think that the market really wants to get a retest of this all-time high range. I think it would be truly telling as to where the market is at if sellers are going to in fact be able to step in and take control of the market at any point in time, right? So people have been left on the sidelines, they're being pulled into the trade, they're being conditioned to look on the lower time frames. And though I do think that we are probably going to return to our all-time high range and give that a real test, I would be very weary of the fair value gaps that we're creating, the lack of any true pullbacks, right? You can see that we very well deviated from our 21 and our 50 EMA cloud. We'll likely see this get tested at some point in the near future. So it's just things to keep in mind as we see price performing so well and making these expansive waves to the upside, right? At some point, we have to know what a trend breakdown will look like. Now, when price does retest all-time highs, I do think we need to be looking out for a structure similar to this, where you do have a series of higher highs in terms of price, but you have a series of lower highs in terms of the relative strength index. I think at this point in time, you would have brought a lot of people into the trade. You'd probably have a lot of people who were kind of entering the long side of the trade late, anticipating new all-time highs, right? We can see that even though this was a sort of different period of time from our 2024 corrective phase, we did fail plenty of different times around this all-time high range. So we got a much sharper correction. It looks like we're getting a much sharper recovery, but it's still that all-time high range that we need to now be mindful of. As we leave these fair value gaps beneath us, as we leave untested levels of potential support beneath us, we're going to want to be very careful as things start to get really explosive, right? So let me know what you are currently looking at on Bitcoin. Do you think we are going back to new all-time highs? When do you think we will break to new all-time highs? And guys, we're going to be following all of this very closely in the Discord. That is free for you to join with the link down in the description. You'll get access to myself, as well as the thoughts of 30 plus trading analysts between stocks, crypto, and Forex, all there to better your game while you learn. But until the next video, guys, I will catch you in the Discord. Peace.